Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. This is the weekend market review for June 9th and 10th, 2018. Let's take a look at where the markets have been, where they are, and where they're likely headed. We're looking at the markets from daily, weekly, and monthly perspectives. Will give us a better understanding of what's going on. So starting with the 10-year U.S. Treasury from a daily perspective, we had a nice bounce here. From 27.59, hit a high of basically about 30 or the equivalent of 3%. You've got PPO really rallying towards a move to break above zero here. The question is what happens. We're struggling right now at the middle Bollinger Band as well as the 50 RSI level. No surprise, if that breaks, then we move higher to 3.1. If it cannot hold, then likely heads lower towards a retest of the 200-day moving average of about 2.67. So very interesting to see what happens. Now, looking at the weekly perspective, this will give us a better understanding of what's taking place here. So we found support at the middle Bollinger Band on the weekly, and we're still consolidating. In my opinion, we're going to be heading a little bit lower. Why do I feel that way? Well, you've got RSI is below 60, and it's showing negative divergence where momentum is lower today than when we were at 2.7. So when momentum is leading price, it typically suggests that price wants to move lower or will follow suit, but not always the case, so let's see what happens. On the monthly chart, it's still very, very bullish. It's consolidating here right below 3.1, still firmly above that 60 level, which has served as resistance multiple times and then now support. And so long as the 60 level holds, I expect this to break and eventually break above the 200-month moving at 3.4. So this might be a while here, but it eventually breaks to the upside from a longer-term perspective. Gold daily, it's consolidating here right around that 1300 level, right below the 200-day moving average, around 1305. Gold looks good. It looks like it wants to move higher very soon. RSI is leading. What do I mean by that? Well, we're at the same level of RSI when price was at 1326, and frankly when price was around the 1340 level. So we got rid of a lot of this overbought condition, a lot of the frothiness that was entering the gold space, and now we are setting up for a move higher, in our opinion. Gold weekly, here again, setting right below the 50 RSI level, and it looks like it just wants to pop, and it's just waiting for that right opportunity. It's sitting above the 200-week moving average of around 1275, right below the 50 moving average of 1301. Actually, frankly, closed just above that, and so we might have one of those big days, one of these days that it's going to see gold rally past 1360 level, possibly as high as 1400 in one day, and that'll really set off this basically this coiled up market that's been holding, consolidating here basically for about a year, since we broke out in about I'd say September of last year, and now we're here in June of this year, and we're still consolidating here, but consolidating above this breakout zone right below that 1400 level. So once we break above that, that confirms that the bull market has resumed. Till then, we just confirm that the bear market in gold has ended. High yield daily chart, it looks strong right now. It's RSI is leading price. So so long as we're closing above that 61 level, it looks like it wants to continue moving higher. Bottom line is, regardless of where this goes in the short run, it looks like it's consolidating, and it looks like the credit markets are in good shape. On a weekly perspective, look at that hammer pattern. It looks like it wants to move higher. PPO is getting set to break above zero, and I think that this is just getting started with the resumption of the market move to the upside. Here again, junk is actually looking very, very good here. Found support at the middle Bollinger Band on the monthly. It's consolidated with time rather than price. PPO broke below zero here on the monthly, and typically that could be a very bad sign, but it's been consolidating, and yet RSI has not really done much in terms of breakdown, and price hasn't broken down, and it looks like it wants to move higher. So I like junk here. It looks like one of the strongest plays actually from a longer term perspective. Oil here on the daily still needs some time to consolidate its gains over the last couple months. I wouldn't be playing oil sector unless you're doing it on a very, very short space right now. It looks like it wants to move possibly below even 60 for just a little bit, scare some of the froth out, and then likely heading higher in the coming months. Looking at oil from a monthly perspective just gives us a larger view that this is a inverse head and shoulders that broke out, and now it's just consolidating here, and once it gets ready to move higher, it's going to see 80 before this move is up. Nasdaq daily, it looks good again. It's not terribly overbought, and it's making new highs, and so it's just a good market all around for equities. You see this on the weekly. It's breaking out in RSI. It's breaking out to new highs. PPO is above 0 here, so Nasdaq looks very strong. And on the monthly, it's exceptionally overbought, but what's overbought can stay overbought for a long time. We see that basically ever since we broke above this point in 2014, we haven't really looked back ever since. We broke below it here. We had a nice correction in January of 16, but ever since we recaptured that, it's been all green basically ever since. Russell, strongest of the sectors. You want to see the small caps breaking out against the large caps, and that's exactly what you're seeing here. Russell looks good. Looks like it wants to, if this can break above that 69.70 level, you might see a 5 to 10% move in the small caps over a week-to-week basis. So we like small caps here. They're probably our favorite sector in the equity space right now. S&P, it's starting to follow suit. It's breaking out as well. You see that here, broke out of this consolidation phase since February, finally broke out here. Momentum is leading, and that's a very, very positive sign. You've got RSI on the weekly chart getting set to break above the 60 level, which is very, very positive development. PPO is now above 0. And so you just want to continue seeing new highs being created on a day-to-day basis in the S&P. But overall, even as energy markets correct, and they play a big portion in the S&P, financials have kind of corrected, yet S&P is starting to really pick up steam. So like the S&P here as well. U.S. dollar, it's fallen back just kind of as we expected. This balance was very nice. But it's now pulled back. Now let's see what happens as it's finding support at the 50 RSI level. Can this hold? Can we see another bounce? Maybe perhaps a double top with negative divergence. We'll see. On the weekly, we found resistance kind of precisely where we thought we would. Why? Because this is where we broke down right around here. The RSI basically broke down right around this level. You draw a line, and it's basically around that same level we're finding resistance. And if the dollar breaks below 92, then see you later, and we're likely going towards that 80 level in the not too distant future. So we'll see. Right now, on the monthly chart, this is what's taking place in the dollar. It's struggling to break above the 50 level. No surprise. You have multiple points of resistance at the 50, and if it can't break through here, then we're going lower. On the other hand, you see PPO moving into a positive direction, and maybe it consolidates here for a while and does break above. Right now it's hovering above the 50-month and 200-month moving averages, so it's pretty good shape on the monthly, whereas the weekly and the daily don't look as strong. The VIX, the VIX looks like it wants to break lower, to be honest with you. I mean, I thought that this was its chance right over here to break out of this pennant pattern, but it was basically knocked down, and it looks like it's heading back towards that 10 zone. But and here you see it again on the monthly. Couldn't hold that 50 level, and that was very crucial, and likely headed back to retest the bottom of this particular range. World ex-US index, it looks like it's bottoming here, and it looks like it wants to break back higher here again. So this might be a good place to enter the world stocks here. And on the monthly perspective, we've pulled back some, but I think that this is getting set towards a move back towards 2,400 and really retest those highs from 2008. So You still want to keep an eye on PPO here. What does it do? Does it curl back higher? Does it break below zero? And time will tell how that's going to play out. But in the short run, I'm just seeing a lot of positive signs in the equity space altogether, and I think that the probability takes us to the upside versus the downside, and you see the junk bonds are starting to bode well. So overall, the markets look good, the economy looks strong, and if you're a bull, that's great, and if you're a bear, well, that's actually not so bad, because you'll get to short from higher levels at some point in the future. Anyway, guys, best of luck trading. Have a great week, and let's stay in touch. Take care.